Joining us now is Devon Energy President and CEO Rick Muncrief. It's great to have you on the show, Rick, especially today, 1 year since this global energy shock, the price shock, the disruption, and we've seen prices come all the way back down. How do you think it's impacting the market still, having Russia cut out?
Well, good morning again. And Sarah, congratulations on the new role, new segment.
Oh, thank you.
And a year ago today, as you mentioned, the world was shocked with the Russian invasion of Ukraine, and a couple of things I'd like to say just as opening thoughts is, number one, I'm really proud of our company and our industry and how we rose the occasion and continue to provide stable products into the market to fuel the economy. So I think as we sit here today, we have seen the realities of Russian crude continuing to get into the market. And, the one thing I would say is that even with the 500,000 barrel a day cut that they have talked about, in the back of our mind, we really question whether is that truly because of what they want to do in trying to control the price, or they have a supply chain issues themselves. I'm not real sure, but a lot of change in the last year. But I will say this, that we've not seen the demand really let up. We're continuing to see demand grow. That's on the crude side. On the gas side, obviously, we've had a couple of things. Number one is Europe. You saw they have had a milder winter than many had feared. Here in the U.S., we've had a lot of changes in weather, but by and large, fairly mild winter in most cases. And we also had the outage at the Freeport, 2 BCF a day at the LNG export facility. So you put that all together, and natural gas prices certainly have come down.
What's happening with production, Rick? Market was disappointed with your forecast for production. Do we need higher prices to see more production from you and others?
Well, I think for us, the production that we reported, our outlook for this year, we were impacted some coming into the year with some weather, but we also have talked about what our shareholders really have asked for us, and that is to keep production stable. And so growth, we're looking at it quite honestly, Sarah, on a per share basis, and so we've talked quite a bit about reinstating our share repurchase program. And so I think that's, for shareholders, that's what we want to stay focused on, keep a steady hand on the throttle, and continue to build a per share stronger company.
Rick, it's been interesting to watch the administration, which has been critical of capital returns to shareholders in the industry. At the same time, they're obviously applauding what the industry gave to Europe in the way of LNG last year. Do you think that supply is making the relationship with the White House a little bit easier?
Well, energy is a complex issue, Carl, and I'll say this. If you'd asked me 12 months ago, I would say that we were not getting any communication between the White House and industry at all. That's changed. They are reaching out more, which I think is a positive thing. It's a positive thing for America on a number of fronts: energy security, and certainly all of our interest as well. So it's a good thing they are reaching out, but I think the recognition is that had it not have been for the U.S. producers and our ability to keep a stable market, the world would have been in a much tougher place, no doubt.
Bottom line, Rick, what's going to happen over the coming years? It does feel like, as long as we're still in war and geopolitical tensions are heightened everywhere, that should support the price of oil and demand for oil. Is that your take?
Absolutely, Sarah. We think that certainly there's places around the world, like China, reopening after their strong approach to the COVID with the shutdown to their economy. That's going to continue to open up. And so I think what you're going to see throughout the year is just a continual strengthening of crude. There's folks like IEA have come out estimating a 2 million barrel a day incremental demand over last year. And when you look at the U.S. maybe being able to make up about a fourth of that, you really wonder in the back of your mind where that growth is going to come from. It's not going to be internationally outside of OPEC Plus. When you start thinking about Saudi and UAE, I think the consensus is there may be 1.5 million barrels a day of excess supply. So to meet the demand, that's saying that we will have zero incremental supply, and so that's a scary place to be, right? When you really think about it. So I do think crude is going to continue to strengthen throughout the year. I think you will see some continued gas volatility. We went into the winter pretty low, quite honestly, when you start looking at storage, and we're going to exit the winter fairly high when you compare and contrast with the 5-year average. So I think natural gas prices could be soft throughout this year, and we'll see what it looks like going into next winter.